Hello traders, Gary Wagner here. Approximately 11 a.m. in Honolulu. It is the 21st day of December, Wednesday, and this is the daily report for gold and silver. What an interesting 24 hours we have had. Very, very strong activity in the precious metals markets after seeing the metals climb, specifically gold, trading to an intraday high above 1640. It sold back down or corrected pretty hard, currently trading off a couple of dollars, $3-4 at 1614. Same thing with silver. Silver was trading much higher, up above $30, back down to about $29.25. The interesting activity that we've seen, of course, was what I am going to label a quantitative easing of sorts by the central banks of Europe, in which they infused a tremendous amount of capital at a very, very low interest rates, providing liquidity to the 500 plus banks within the European Union. The interesting factor about that is, unlike quantitative easing, where the Fed has taken on the risk itself, it seems as though this quantitative easing is being done through proxy. In other words, by loaning the money to the banks will be taking the basic risk, and the Central European banks will be providing the liquidity. Now, I sent out a special notice, a trade alert. This went out, of course, last night, and what I had noticed was that when the market hit this 100% extension, this is the extension of wave one, this is a very, very small subwave that we're following, I sent out a notice saying that this is the point we really want to watch, because in terms of straight Elliott wave forecasting, wave 3 cannot be the smallest of any of the impulse waves. So at 100%, you're at the bare minimum. Of course, it can go as high as about 161%. That's the top end of the range. And what you saw is, as this market traded higher, it did break through that 100%, and it began to stall really at the 123 extension point. And you can see that right in here as that marketplace itself found resistance and began to sell lower. So what is my belief? Well, my belief is that on this particular wave, we have probably concluded, and this is a minor count again, we've probably concluded 3 and this minor 4 right in here, and are moving towards the last of our small impulse on this real minor wave. Once this minor wave completes 5, and I think right now what I'm calling for 5, my belief is about 1650 is really where I see this market probably running out of steam. I would look for one last correction, because this itself will terminate the last of that wave 4. We'll have one more wave 5, which will conclude this last major 4 wave down. So it should be very, very interesting, to say the least. You know, as we get closer and closer to the end of the year, we're just a couple of days away from Christmas, I do expect the markets to slow down a little bit, but you know, anything is possible. Dollar index, again, you see it has recouped. We have this, after this market has sold off, we are now seeing what is simply known as an umbrella line, and more specifically, this candle itself is simply called a hammer, followed by confirmation. It would indicate that this market, in fact, might have another move back up. I wouldn't be surprised overall to see the euro continue to go lower against the dollar. I'm not really looking for parity, but I wouldn't be surprised with 110, even 120 in terms of the straight exchange rate. We had a big rally in the equities markets overseas. They did spill over into our markets, but that has been short-lived. You can see on the daily chart, we have this small, almost doji-like candle. It looks like it has closed near the open. It has made the low and also come off of the low. As far as silver goes right now, silver, I believe it's going to follow suit with gold, but a strong equities market gives it additional emphasis to move to the upside. But in terms of our daily candle, this is the March silver, you're getting really a shooting star or what's called an inverted hammer, the opposite. And it is just trading in this tight range, so I'm not going to make much of this particular candle type today. Of course, we're in 29.10. We're going to hold that position. We are also in 15.88 in the gold. We're going to hold that position. As I said, my expectation right now is going to be under the belief that we have probably concluded this minor four and are now headed towards one last little year-end rally. That rally, I believe, will probably take us as high, as I said, to about 1650. That would be a 100% move that we saw, the same move that we saw from 1 to 5. And that can be construed as a typical fifth wave move equaling that of wave 1. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.